Hey guys, Steve here with your trade school video for Tuesday, August 19th, 2014. And last few weeks what we did is we looked at how to read a stock chart. Last week we looked at how to read candlestick charts, the different aspects of the candlestick chart. And today what I want to look at is trend lines and consolidations. That's really what we use here at the Turtle Follower to enter and exit positions, raise stop levels. So I want to look at those two aspects of a chart, and then I want to just go briefly into how we use those in entering and exiting our positions. So the first thing I want to go over is what exactly is trend following. I am a trend follower. The blog is developed for people who want to learn how to be trend followers, and I just went to Wikipedia and got a quick definition, and it says trend following is an investment or trading strategy which tries to take advantage of long, medium, or short-term moves that seem to play out in various markets. Traders who employ a trend following strategy do not aim to forecast or predict specific price levels. They simply jump on the trend and ride it. These traders normally enter markets after the trend properly establishes itself, betting that the trend will persist for a long time, and for this reason they ignore the initial turning point profit. Meaning, we're not looking to get in at the bottom, and we're not looking to get out of the top. We're looking to get that big chunk in the middle, which could be 20%, 30%, 10%, 15%, whatever it works out to be. That's what we're looking to do. And then it also goes on and say, cutting losses. Exit a market when the markets turn against them, and to minimize losses and let the profits run when the market goes as expected until the market exhausted and reverses to book profit. Okay, so there's some words to kind of describe what we're doing, and now we're going to take a quick look at a chart. This is a trade that I'm in personally. It can be any chart. Just the idea is just to show you different aspects of what got us in, or what got me in, and why I'm still in. So this is a chart of Alcoa. Okay, the chart on the bottom is a 1-year chart, daily chart. The chart on the top is a 3-year weekly chart. So what we do is we identify areas in the market, in the specific stock, where price is consolidating, meaning it's just really moving sideways, but we want to be able to identify as well a trend in that price. So this yellow line here, right here, okay, that is called a trend line. So a trend line actually connects 2 or more points. I usually like to have 3 that will establish the trend of the trade. Okay, so what that means is, we can take this trend line all the way back, and normally what happens is it starts out and then they kind of morph as the trend goes longer. Okay, but what happened here was we had this consolidation on the weekly chart. Price moved sideways, and then price broke out, meaning that it started to trade above the top of this, for lack of a better term, this gray box. Okay, and we'll go into support and resistance another day, but for right now I just want to basically show you what trend following is. So this gray box was, the prices started to trade above the gray box. Okay, and then at that point, okay, so right here, from October of 2012 or 2013 to about December of 2013. So that's right in this area here. That was a point where we moved sideways, and then we started to break out. Again, with prices trading above this gray box. So when that happened, let's take this off for now. I said to myself, here is what looks to be a trend. Okay, here was a low, another low, and another low, and they're all along this yellow line. So the stock, in my opinion, was trading higher. So I wanted to look for a point where I could buy stock to to that would appreciate in value for however long I owned it. So what I decided to do, and I don't, again, I don't think I got in here. I think it was more over here, but I'm using this box for illustration purposes. So what you would decide to do is, once you knew that this top of this box was no longer holding the stock within the box, you would buy stock. Okay, so you would buy stock here, say around whatever, Christmas, 12/23, at $10. Okay, this would be an ideal situation. Again, this is just for illustration purposes. It's not really where I got in. So you would buy stock here at, say, $10. You would put a stop level. Again, we'll go into the stop level more next week, but a stop level basically means a price that you feel you would exit the trade to cap your losses. You don't want to lose any more money than that. So that level would be down here where the price bounced off trend. Okay, so that would be, say, $9. So you're risking $1 in the trade. So however many shares you buy, yada yada yada. But essentially, you would get in here at $10 and then just let the stock work. And you could see it came back down, tested that trend line again. Okay, then it moved higher, moved higher. So this is the whole idea of riding the trend. Okay, the trend is higher. Stock is above the 50-day moving average and above this trend line. So you're going to ride it, and you're just going to continue to trail your stop levels. All these red arrows here, or lines, are stop levels that I had at one point or another. My new stop level is where this yellow arrow is. So 15, 20, let's say. But what happens is you continue to ride, continue to identify consolidations, and continue to trail your stop. And again, there's no predictions. When I entered this trade, that's what my chart looked like. Okay? I have no predictions. No, maybe it was more like that. Let's say. No idea where the stock's going. Couldn't tell you. Okay? All I know is that I wanted to limit my losses, and therefore my stop was down here at $9. Okay? And then as the stock goes, you just continue to ride the trend. See how it came back down to the yellow line. Okay, now it's consolidating again. Consolidating. Alright, still. Alright, there's another breakout. Okay, so here was a breakout. Another reason to trail stop higher. Again, no predictions where this is going. You're just using the price action. You're letting the stock tell you where it wants to go. Okay, all you're doing is managing your risk. Breaks out again. Okay, consolidating again, consolidating some more. All right, tested that level a couple times. Oh, broke out again. So now stop trails up. Still riding the trend. We're just riding. We're along for the ride. And I have no idea where we're going to get kicked off. Okay? And that's the whole point of trend following. And that's how you stay in these stocks for 6, 7, 8 months, a year sometimes at a time. And you pull in 20 or 30% gains. There's no prediction with this system, okay? It's all a matter of following price. Don't worry about where you're going to get out. Let the stock tell you where you're going to get out, okay? For me right now, under this 1530 level, I would consider that to be an area where the stock would start to reverse, because since I've been in the trade, it has not closed under the 50-day moving average, right? This blue line, okay, which is the average of the last 50 days. Stock is not closed below there. So now if we get to a point where we're under 1530, well, now we're obviously getting some levels, some closing prices below the 50-day moving average, which indicates to me the trend may be changing, and therefore it's time for me to exit. And I'll gladly take my profit and look for another trade. All right, so that's what trend following is. That's what we're trying to teach here at the Turtle Follower. Again, no predictions, managing risk when we enter, following trend lines, and following and trailing stops higher. That's the way we manage our positions. I'm not saying, oh, if I make 10% I'm out. It's not like that. All I'm doing is managing my risk when I get in, trading small enough that a trade is not going to hurt me as much as it would if I had half my portfolio in it. Follow the trend and trail stops. Let the stock tell you where it's going, where trend is reversing, just by the price action. As you'll see on my charts, there's not a lot of information. I don't have other indicators. It's very simple price analysis, and that's it. Okay, so that's what trend following is. That's what we're trying to do here at the Turtle Follower. Definitely, if you have any other questions, please leave some comments below. Hit the like button. Follow me, StockTwits, Twitter, Google+, and subscribe to the YouTube channel for future updates. And you can also subscribe to the nightly recap, where we're doing this every night with the strategy sessions, and also with the videos in the morning, that more educational videos. They will be delivered directly to your inbox. Make sure you're following the strategy sessions while they're while they're free. Eventually they will become premium content, but that's well down the line. But again, this is all just setting up a plan, following that plan, and not getting attached to a stock, and just following price action. So I hope that helps you guys. Next week, again, we'll go over a little bit more on the technical analysis side, as far as support and resistance areas, what a stop level is, in a little bit further detail. And then we'll take it from there. All right, so like I said, have a great rest of the day, and we'll see you tonight for the strategy session.